This is going to be worse than the housing crash. Folks, we are back in the studio. I am trying a brand new setup today. Please let me know if you can hear me. Give me a thumbs up. I'm actually doing this on my iPad versus my iPhone. And I bought a fancy new mic. So I am unsure if you can hear me. So if you're out there, let me know that you can hear me. And we will get rolling. Need to test this out one time. So let me know. Can you hear me? Are we good? Actually, I have no idea how this works on an iPad, but we'll just roll and see where we are at. So again, let's just jump into it. What do I mean by worse than the housing crash? Well, if you happen to see my presentation, that VIP session over the weekend, we were talking about multifamily, right? We were talking about the same mistakes in multifamily or commercial real estate, right? And it was short-term, variable rate debt, bad assumptions, the thought of easy money, and of course, no operational experience. We did the same thing in commercial than in residential. So when I say worse than '08, I actually have the numbers to back this up. Let me share them with you. From Q2 of 2007 to Q3 2009, multifamily fell 34.3%. 34.3%. Today, as of right now, multifamily has fallen 26.9%. So we are just at the beginning. Somebody asked me the other day where we might be in the multifamily arena, and I thought third, possibly fourth inning. Okay? So if we're already down 26.9%, and last time it was down 34.3%, folks, we are going lower. And we repeated the same mistakes. Short term, interest only, variable, bad assumptions. Everybody thought it was easy, and of course, no operational experience. I don't know what to tell you, but yes, this will be greater than '08 on the multifamily side. Now, it will not happen in residential. Why? Because we didn't repeat those mistakes. We have 30-year fixed debt. We have low interest rate. The effective mortgage rate is still 4%. So again, when I say worse than '08, let's be clear, that is in multifamily. And folks, we're almost there. We did get some earnings. Let's talk about some earnings. We did get some tech earnings. I have those for you. Let me make sure I got them. Shopify beat top line, beat bottom line, but gave a very weak forecast. Uber, weaker than expected bookings. Dutch Bros is interesting because, again, remember last week, Starbucks had a horrible number, and some of you correctly pointed out that maybe it was just a Starbucks issue. You might be right. Dutch Bros pops on 10% same-store sales, so Dutch Bros is doing something right. Lyft beat top line, beat bottom line. And then one that's very interesting because next week I believe we get Home Depot. I believe we get Lowe's. There's a company that you may not have heard of. It's called Builder First Source. As you might expect, they sell to builders. Shocking. Great name. They have not missed a quarter in 5 years. That's 20 quarters in a row. Well, folks, they missed, and they missed bad. Builder First is highlighting that affordability issues is biting single-family home. They are also highlighting that the multifamily market is weakening. This makes sense. Remember, we had all that building, everything penciled, and then now it doesn't. We are seeing high rates pull supply off the table. If rates stay high enough, long enough, it is theoretically possible where rents could start going again, should we have a big reduction in supply. So again, Builder First Source missed first time in 5 years. I am curious what happens to Home Depot, what happens to Lowe's. I think those, I don't know. Let me know in the comments below. What do you think? Do you think Home Depot and Lowe's miss? I think Home Depot lowered guidance, but I could be wrong. I read a lot of stuff. I don't know if you guys saw this, but Zillow, yes, folks, Zillow did exactly what we talked about. Remember, folks, when that settlement came down, I postulated that Zillow and likely others would create buyer-oriented options. Well, Zillow has come out and basically given the middle finger to real estate agents. Zillow is saying we will sign a 1-week free buyer's agent tour. So we will basically allow you to sign here for free, basically trying to get around agents and control more of the transactions. Folks, Zillow, Redfin, all these other folks, they will be releasing things aimed at the buyers. They will try to control the buyers, that part of the cycle. We'll see what that means for real estate agents and others going forward, but pretty interesting. Folks, if you happen to be shopping in Austin, Texas, someone that's been on the channel, I think a couple of times, Danielle Fountain, go give her a follow on Twitter. I think that's where I found her. She just highlighted yesterday that Austin, some parts of Austin, have a 6-month supply. 6-month supply of active listings. What does that mean? It means it's time to write disrespectful offers. Folks, this is the game. This is where we've been talking about. Now, again, that's very Austin specific. Maybe there's some markets in Florida. But as rates stay higher, demand will stay flat. And again, we will see days on market tick up. That's a good thing. That's a good thing. John Burns survey talked to 1,400 agents. John Burns Real Estate Consulting. Not surprising, 99% of real estate agents are seeing listings that require upgrades or fixes, repairs. Why is that important? It's important because this is what I told you to look for. What is happening today? In most markets, clean, dialed in, move in ready, below the median, hotcakes, sold. Properties that are not perfect, need updating, folks, they're going to sit. And again, as investors, that is a good thing for us. We know the numbers that work. We know what we need to get done. FHA buyers, VA buyers, they do not have the capital to buy a fixer and then do the remodel. It's just not, it's not in the cards. At 8% mortgage rates, they need perfect. So what do? Well, we probably change our searches to days on market, 30 days or more. Again, you do you know your market better than me. We then start to look for properties that aren't perfect, that are sitting. And then you and I need to go, what would be a rental remodel? Because again, a homeowner has a different standard than maybe a rental. Maybe a new homeowner would spend 50 grand or 20 grand. Maybe as a rental, you know what? The kitchen's not that bad. Maybe a fresh coat of paint on the cabinets. Maybe, a thorough cleaning. Maybe some carpet in the bedrooms. I don't know. But maybe a rental remodel is 5 grand. That's a lot better than 50 grand. So again, folks, our time is coming. Our time is coming. It has been years and years and years. I know it has been hard. I want slower markets. When rates were 3% and there was no inventory, tough. Only the big wigs who could do mailing like Jason Pritchard or Omar who does ads or Adrian who does commercials could get off market. The market we are going into is perhaps the best market we've seen in the last 5 to 6 years. Why? As long as rates stay where they are, inventory is going to pile up, days on market's going to go up, and you and I will write disrespectful offers. You don't need all of them. You need one. This is the market. This is the market you were looking for. And yes, eagle-eyed folks, Sean Cannell's team at Think Media did misspell Michael. I've never seen Michael spelled that way, but I think it's a fun gift. I'm going to keep it because I'm going to keep that until I have 100,000 subs. Then I'll put up the YouTube 100,000. But yes, it is misspelled. Good catch. So again, folks, this is the market we've been waiting for. This is the market we've been waiting for. Just do the work every day. Keep moving forward. If you're in the private Facebook group, right, the one for this course, just keep motivating people. Keep helping them move forward. Folks, it finally happened. It finally happened. Another Fed president indicated that rates may have to go up. Remember, folks, last Wednesday, I was disappointed, or maybe it was 2 Wednesdays ago. Time flies. I was disappointed that Powell took a rate hike off the table. But in hindsight, I don't think he did. I just think he was sneaky. He had this line: "It is unlikely that our next move is a hike." Well, unlikely ain't zero. And also, don't forget, they did remove that line from the statement that says we are at restrictive, or we are at the terminal rate. They removed that line as well. We did have Michelle Bowman 2 weeks ago indicate that a rate hike might be required. Now, good old Neil Kashkari. Neil Kashkari says we can't rule out a rate hike. Well, thank you, Neil. Go tell Jerome. Rates will certainly stay higher for longer, aka extended period of time. If inflation stays stuck at 3%, we may be forced to raise rates. That's exactly what I wanted Jerome Powell to say. Again, I do not know that we need a rate hike. I just want the Fed to threaten a rate hike. Let's just get this thing going. Last thing we'll talk about, and then we have a lot of people to congratulate. I've been traveling, so I haven't been able to get out cards. We will do that momentarily. Just talk about rates. We did see refi demand jump 5%, down 6% year on year. We saw purchase apps go up 2%, down 17%. We did get an update on rate forecasts for 2024. Fannie Mae thinks we will land at 6.4 at the end of the year. Mortgage Bankers has the same number, 6.4. National Association of Realtors, 6.5. And Wells Fargo, 6.5. All of these folks before were between 5.9 and 6.3. So again, rate forecasts are going up. All right, folks, let's congratulate a bunch of people. I have a bunch here. Again, that's the end of the daily financial news. If you want to go, no hard feelings. But I'm going to congratulate some people because that's what we do here. Angelina, congratulations for getting your next deal. Your card will be in the mail. Mike, congratulations for getting your next deal. Your card will be in the mail. Brandon, congratulations for getting your next deal. Scott, congratulations for getting your next deal. Tony boy, you got the golden ticket. Yes, folks, these black cards, you can get as many as you would like. Tony, congratulations for getting your golden ticket. You only get one of these. This is for your first deal. Congratulations, Tony. And then we have Senya. Congratulations. You actually double dipped. Senya, you've got 2 cards coming to you. Senya, I apologize. I owed you these a month ago and I messed up, but there you go, Senya. And one more, Chris. Congratulations for getting your next deal. Folks, look at all these amazing folks doing the work. We've got some golden tickets, some black cards. This is what the community is about. It's about doing the work, only doing great deals, follow up, all of that. And then one more thing. There's a frequent commenter, Raul, who has done some amazing calls. Raul, this is your Nailed It t-shirt. Raul, you've made some pretty fantastic calls. You nailed some, so your t-shirt is it will be in the mail. These cards will go out in the mail. This one I got to hand off at the post office, so it might be a day or so. But there you go, folks. That is the daily financial news. Like, subscribe, comment. Keep doing the work. Keep being positive. The market is finally coming to us, and I'm pretty excited. Hopefully you are too. Later.